do an introduction.
Okay.
Hey, it's Aaron Lovett, and I am here with...
Alonzo Stanley, Bell Bank.
All right, Alonzo.
Yes, sir.
We've got some questions for you.
Okay.
What are rates looking like these days?
Heard this morning close to 20-year highs.
What's that doing to the market?
Of course, nobody likes a higher rate, right? Everybody wants to get in and have the lowest payment as possible. It's a really good time for certain loans right now.
Tell us about that.
I love first-time home buyers. I love all buyers. I love move-up. I love jumbo buyers, but I love my first-time home buyers as well.
Yeah.
And this THDA, I've been saying this for a little while. It's THDA season right now. Certain individuals may be able to qualify on their Heroes option to a rate as low as 5.375 right now. Again, the rate's subject to change daily, but they're published rates online, and typical rate is around 5.875.
That's not as awful as I was expecting you to say. Very good.
No,
Okay.
no, that is a really attractive rate. I mean, I know it's not the 3s and the 2s.
Yeah, qualifies for that.
These are typically first-time home buyers, but there are also some individuals that may be buying in a certain area, or veterans that you don't necessarily have to be a first-time home buyer to get those rates. Acquisition costs just went up. What that means is they have a maximum purchase price. It just went up to across the state, which is kind of cool. This just happened.
Okay.
To $400,000. That's cool because there were certain markets where the affordability of the price point was quite a bit lower. Across the board, $400,000. They also went up on their income limits, which allows more people to purchase as well. This is a good time for THDA right now.
There are a lot of houses right now under $400,000
Yes.
in Middle Tennessee.
Yes,
Yeah,
yes.
that's good.
Very good. We'd love to help you get in there.
Very cool. Any other cool products you want to tell us about?
Well, sure. I'm big on helping people break the entry barrier to home ownership, and a lot of that times it's down payment. We got conventional options that offer home ready, home possible. They offer 3% down, but at Bell we have our Moving Forward initiative where we'll add a 2% loan on top of that for qualifying borrowers to be able to only put 1% down on those properties. We also have products designed to assist minority homeowners that will offer similar features with excluding mortgage insurance. We have USDA, that's 100% financing, VA of course, 100% financing. So there's a lot of options out there for those to help make getting into home ownership a little easier. Plus, I recently closed the home for someone and they got $20,000 in down payment assistance.
Okay, stop right there. I want you to tell the story. What's the deal? What can you do to help somebody get $20,000 in down payment assistance?
Well, they can check out my live video coming up in a little bit. But there are certain organizations that have opportunities for home down payment assistance. This particular client got $20,000 on a price point that was around $225. That did a lot for that person. They were able to put that money towards down payment and cover closing costs.
Sweet.
And that $20,000 was zero payment, zero interest to on sale. What that means is that there's no payment. Essentially, it's like me giving you $20,000, say, hey, Aaron, this is it for now, but when you get ready to sell, I'm gonna need my money back to help somebody else.
Awesome.
Another thing that I love about that product is that it had a feature that allowed them to be able to go over the income, like the DTI thresholds that some other programs have in place. That it was able to allow them to be able to get in when other programs wouldn't because of the DTI threshold.
So DTI, debt to income,
Yep.
I'm normally looking at around 40% or so.
Yeah, THDA has a max of 45.
45.
And which is really good because they don't have that front end ratio that some programs have. So I really like THDA, but again, 45 would not have been sufficient for this person.
What were you able to
We
do?
were like at 54%.
54%.
Which sounds a little scary, but again, they're able to take advantage of homeownership, get funds to be able to get into this home and ease the burden. People typically find a way to come through on their mortgage. You work hard for a mortgage, then a home. Typically, they're going to find a way to take care of that first. And as we know, income typically is going to increase. I remember when I first got in my home, the monthly payment, that it was scary. I was scared to death of that monthly payment, but now I would kill for that monthly payment.
Yeah.
Just getting in, man. Getting in the door.
Yeah, incomes usually go up and values over time go up.
Yes, yes. I mean, think about what we do for people as far as when they get in a home. You know, real estate is an amazing tool to help people be able to have a solid foundation, solid as possible, and be able to make things happen.
Yeah, very cool.
Yep. Aaron, I got a question for you.
Oh, okay. All right.
Now, you've been doing this for a while. What do you enjoy most about what you do for people?
This is going to sound really, really corny, but there are really two things. One is I love solving problems. So when I see a situation that's a little tricky, then I love being able to come up with a solution for that problem. So I'm working with a buyer now that their problem is they need to combine their households. It's that time for mom or dad to be elderly parent, to be with the family. They can't afford to just go out and buy a big house. And it's not a situation where we can sell a house, but what are we going to do with mom if her house sells and we can't move her in because we don't have room? Otherwise, that'd just be the solution. I've got a solution for it. We're going to be able to move forward.
As you know, my brain, I'm a problem solver like you. Did you know that you can actually have 2 primary residences? And that you can actually purchase a home with as little as 5% down if you're taking care of an elderly parent or disabled child.
Yeah.
Sounds like that may be something.
I don't want to give away any. I got people out there. I'm trying to protect privacy.
No, it's all good. No, it's all good. But that's just one option out there. There's several different things, and what I love about it, being a problem solver, knowing your tools that you have in the toolbox, or trying to find a way even to wiggle and make something work. That's what we do, and we love it when it works.
And then the other thing I love is I love to see the smile on the face at closing. We did it.
Yeah.
We did it. I love that. That's awesome.
Yeah.
So, I told you it'd be cheesy, but that's real, man. I'm a people person, and there's some things that I'm pretty good at and some things that I'm not so good at. But one thing I'm pretty good at is I love people.
Yeah, man.
I love to help people.
Yeah.
It makes me happy.
Yeah. And I vouch for this guy here. He's a great brother. Appreciate him.
Thank you very much.
His family, and they've trusted me to help them in the past, and just help him with his clients, and it's just valued highly.
I would not use you if you didn't know what you were doing, if you didn't take care of my people.
That's what's up.
There you go. That's it right there. No,
all right.
Mortgage guys are a dime a dozen, right?
Yes. Yeah. But not as
like
much.
realtors.
Not as much anymore, because it's a tough field right now. Things are changing. The market is tightening up, but we're gonna put our feet down and stick with this. And we would love the opportunity, if your goal is home ownership, just want to talk. Just want to learn a little bit more about what we know. Yeah. I know Aaron will be happy to share.
Do one more thing for me. Okay. Explain a 2-1 buy down.
We're approaching 8% on our interest rates. That's pretty scary, because it hadn't been that high in about 20 years or so. But you can actually purchase and get a 2-1 buy down. The seller will fund a 2% 2-point buy down. So that means that the rate will start at 6. Next year it will go to 7, and then it will be 8 for the rest of the term. Good strategy to consider as we are looking forward to better rates in the next year or two. This would allow you to get in the door and possibly look to refinance as rates go down. Then you'll be able to take advantage of a little bit lower than market rate for at least a couple of years.
Cool.
That makes sense?
That makes sense. I don't know.
Makes sense?
Yeah.
But man, I appreciate you.
Always. Appreciate you, Alonzo. Thank you very much.